The only bright spot in the market, though, is the financial space that is doing well and is trading in the green, especially Bajaj Finance, Shriram Finance, Muthoot Finance. All of these financial companies are doing well with gains of 2% or thereabouts. But let's get more stocks that are in focus today. And to get us more on that, we are now joined by Ashish Kyal, who's the founder and CEO of Wave Strategy Advisors, who's joining us on the technicals. And from our research team, we're joined by Rabinder. Hi, good afternoon to both of you, and thank you so much for joining us. Well, let's start with the show. And the first stock of the day, that's ICICI Bank, that's in focus because it has received approvals from the Reserve Bank of India to acquire stake in 8 different banks. Now, RBI permits ICICI Bank, ICICI Prudential Asset Management Company Limited, along with group entities of the bank acquisition to be done within a period of 1 year from the date that RBI letter is filing the letter, after which the approval could stand cancelled. Now, approval enables ICICI Bank Group to significantly increase its strategic footprint across multiple banks, potentially reshaping market dynamics and investment strategies in the sector. Well, ICICI Bank, ICICI Prudential is likely to acquire an aggregate holding of up to 9.95% of the stake in 8 banks, and those banks is Bandhan Bank, City Union Bank, Equitas Small Finance Bank, Federal Bank, IDFC First, HDFC Bank, the Karur Vyasa Bank, and the RBL Bank. These are the 8 banks where it could increase its stake, and on the back of that, ICICI Bank is up 1.4%. But coming to you, Ashish, you've picked out the top buzzer, Bajaj Finance, because financials are really doing well and holding the fort in a market like this. On the charts, what are the levels to watch out for?
Hi, afternoon to you and all the viewers. See, if you look at Bajaj Finance, the stock corrected earlier from 1100 levels, made a low of around 890. From there, showed a very sharp bounce back on 3rd of Feb when all the markets post the US-India trade deal was announced. And now it's after consolidation, it looks like resuming the upside journey again. We can expect the stock to move towards the level of 1020, and on the downside, the 20 days average, which is around 947, can be a good stop loss.
Those are the levels to watch out for on Bajaj Finserv. But coming to you, Rabinder, Lenskart, another earnings candidate. Tell us, what does the fine print look like?
Well, yes, Lenskart is in focus on the back of the strong set of number in Q3 FY26, where in this quarter, company's revenue grew by more than 10% year-on-year basis, and this growth is backed by expansion on the back of the volume expansion and the new customer addition in Q3 FY26, and net profit also expanded from 102 crore to 131 crore. And after this strong set of number, Morgan Stanley has come out with a note, and they have upgraded the stock to overweight from the earlier rating of equal weight and hike target price rupees 561 as compared to earlier target price rupees 445. They say that the Q3 FY26 India revenue growth was more than 40% year-on-year basis, and valuation re-rating justifies on sustained growth delivery. So back of this strong set of number and positive brokerage note, Lenskart is in focus, and the stock is up more than 8% to touch a record high level.
All right, Lenskart up and away 8.5% in a market like that. Good set coming in there. But let's move on to the next counter, Vodafone Idea. That's down 4% after JP Morgan downgraded the stock to underweight from neutral and set the target price at 9 rupees per share, which implies a potential downside of 23% from the current levels. JP Morgan believes that the recent stock outperformance is overdone as the company still awaits bank funding to drive the next leg of its capex cycle. The brokerage said that fresh capital expenditure is crucial for Vodafone Idea to arrest subscriber losses and move towards net subscriber additions through improved network investments. While the first capex cycle began in the first quarter of FY25 following the 18,000 crore rupees fundraise via a FPO, which helped the company partly stem subscriber losses, it was not sufficient to deliver positive net additions. The brokerage has also flagged off that Vodafone Idea's target of a 3-fold increase in cash EBITDA over the next 3 years appears rather aggressive, as it factors in the market share gains versus Bharti Airtel and Reliance Jio, a scenario JP Morgan views with caution. On the back of that, it is downgraded the stock, and Vodafone Idea is trading down 2.3% right now on the back of that. Ashish, you've picked out Britannia from the FMCG pack. Tell us, what are the levels to watch out for here?
See, from the FMCG pack, Britannia showed a very strong gap up opening yesterday. It is now showing some kind of acceptance at the higher level. The stock has been in a consolidation mode for since September onwards, but now should likely give a very strong breakout on the upside. So one can create long positions here, not only from short term, but from a medium term perspective also. We can expect it to reach towards the target of 6,400 and eventually higher. On the downside, the gap area, which is around 5950, can act as a very important support.
All right, so that's Britannia on the charts. But with that, it's time for a quick breather. Don't go anywhere. After the break, we'll get you more buzzers on the other side. Stay tuned. Welcome back. You're tuned into Market Fatafat, where we're getting you all the buzzes in trade. And Ravinder, now you have picked out LG Electronics for us, an earnings candidate. Take us through the fine print of the earnings.
Well, as LG Electronics is under pressure on the back of their weak set of Q3 FY26 earnings, and in this quarter, company's revenue declined by approximately 6.5% year-on-year basis to rupees 4,114 crore, and EBITDA also saw a downtick of approximately 43% year-on-year basis from 340 crore to 196 crore, and the company reported a weak result on the back of the weakness to a lower than expected post-festive demand, and particularly in the compressor-led products, and margins was also impacted by the lower sales, higher input cost of copper and aluminium, and rupee depreciation. And management say for the Q4 FY26 that the positive influence on consumer preference with a new BE rating portfolio introduction, witnessing a healthy demand across categories, which with the compressor-based products set to pick up in the summer. So back of this weak set of number, LG Electronic is in focus, and the stock is down approximately 3.5%.
All right, LG Electronics down 3.5% in the back of weak set coming in, but M&M is also another counter that is in focus in the back of Q3 results. And if you look at the scorecard, the revenue, EBITDA and PAT are in line, though the margins are below the expectations, even though auto and farm EBIT margins are in line. As far as the labour code impact is concerned, that was for around 98 odd crores. Nuvama is maintaining a buy call, and they've set the target price at 4,400 rupees. They feel that the quarterly revenue is up 26% on a year-on-year basis, and the EBITDA is slightly below what they were expecting. The auto and farm both delivered strong volume-led growth. The margins are stable, and the farm profitability has improved. And the auto is slightly, softer, but they're maintaining the buy call. And Goldman Sachs is also maintaining a buy call, and they've hiked the target price to 4,400 rupees. They feel that the Q3 is in line. The tractor guidance has been raised to 24% on a year-on-year basis for FY26 estimates, and the capacity addition is likely to support a multi-year growth opportunity. So Goldman Sachs has hiked the target price for M&M, and Morgan Stanley is also overweight, and they have though cut the target price to 4,358 on M&M. So that's what the brokerages are calling on M&M. But Ashish, you picked up Tata Steel for us. Tell us on the charts, how does Tata Steel look like?
See, we can clearly measure that there has been, the metal stocks has been under pressure, except the steel stocks. They have been doing exceptionally well. Tata Steel touching that 52-week high, despite of the pressure that we are seeing across the space. And it is now just consolidating. I think the overall stock is in a secular up move. We can expect a target of around 220 in this stock. On the downside, one can maintain a stop loss of around 201.
All right, so that's Tata Steel on the charts. But Ravinder, another earnings candidate, HUL, FMCG major. Tell us, what does the result look like?
Well, as HUL reported a mixed set of number in Q3 FY26, that in this quarter, company's revenue grew by 5% year-on-year basis, and EBITDA has also grown by more than 2.5% year-on-year basis, and company's EBITDA margins has declined from 23.7% to 23%. And if we talk about the volume growth of the HUL consolidated, then company reported a volume growth at 4% as compared to which is above the street estimate. And for the home care segment, company reported revenue at rupees 5,887 crore, and with volume growth of mid-high single digit. So back of the mixed set of number, HUL is in focus, and the stock is down approximately 1.5%.
All right, HUL down 1.5% in the back of that set coming in. But then the next counter is BHEL that is in focus, because the government will sell 3% stake representing over 10.44 crore shares in Bharat Electronics via an open offer for sale, and OFS. The PSU has set the floor price of 254 rupees per share. The current government holding is at 63.17%, and the post-government sale of its holding, it will stand at 60.17% and can further reduce to 57.92%. On the back of that, BHAL is in focus. It is currently absolutely flat, though it is hovering around the lowest point of the day with cuts of 0.1%. And with that, that's the last talk of the day. Ashish, thank you so much for taking the time out and giving us your picks and the tech check on that. Ravinder and I will take your leave. Thank you so much for joining us. It's a wrap on this edition of Market Fatafat.